Let's check the markets where you know by now we're well off the lows. Take a look at the Dow, about to go positive. Actually, it looks as though. S&P following that story as well. NASDAQ still negative, and the Russell, in fact, is positive today. So, Joe, we turn to you. So we got a big week. We have these new risks that are obviously front and center and for us to consider. So how do you see things now?
I see things as the safe haven trade is clearly in place. I still look at the environment. I see a disinflationary trend. I see slower economic growth, and the horrific events of the weekend do nothing to reverse those two conditions. That's what I see in front of us. I still believe that bonds over equities is where you'll see more of the value opportunity. But within the equity market, you still have the areas where there are strong tailwinds, and we know what that is. That's the Magnificent Seven. You could make the case that clearly energy is making a little bit of a comeback there in that regard. And then the defense stocks.
Yeah, most immediate. I'm glad you brought it up, and I forgive me for cutting you off, but I want to go there. You bought the ITA.
I did. So we had maintained positioned in the quality momentum strategy to both Lockheed Martin and Northrop Grumman over the last several years. Early in 2023, we exited those positions. There's nothing that could be affected within that strategy until the end of the month. But personally, I felt given the sell-off that we've witnessed in the defense stocks year to date, and then the unfortunate circumstances in the Middle East this weekend, it's just a gentle reminder that you need that exposure to the defense stocks, and I wanted to do it in a very universal way, so I went in and bought the ITA, which gives you exposure to all these names.
All right, so, often you all, describe things that are short-term in nature as just for a trade, not a longer-term not a long-term thing. How do you envision this?
I view this similar to what I have said about the cybersecurity trade, Palo Alto, CrowdStrike. I think this is a longer-term trade. I think, Jenny, it's realizing the value in a lot of these defense names, which have underperformed so far year to date.
All right, so Jenny, we'll go to you. I mean, size up the week here. So we have inflation data, we have earnings, we have geopolitical risk. We're watching oil yet again after it got crushed, last week. All of these things now to consider, by the way, in a week in which we're going to mark a year anniversary from the bottom.
Right.
Last October.
Right. So I ended Friday thinking, boy, this world is pretty murky. There is a lot of stuff going on. There's a lot that's unknown. I think that over the past couple weeks, we've been kind of trying to find a new bottom. It seemed like we found that. Maybe things were getting a little more clear. And then the Israel and Hamas situation over the weekend, I think, just threw this really dark cloud on top of everything. And I've thought a lot about what the realistic implications for the market are. And while it's hard to say what they really are in terms of oil prices or transport of goods. I think the biggest thing where it can challenge the investment environment is on consumer sentiment, because you know what, however you cut it, it feels horrible. And when people feel horrible, they are not willing to pay the valuations that they were before. So where we have this peak valuation on the stock market of 22 times, we've been hovering this in the 17 times. When people are feeling bad, that's going to get lower. We don't have earnings supporting it either. In fact, we see Goldman go out and say, all right, $237 earnings for 24.
They reiterate, and they were already positive. It's not like they've taken down their expectations. They're not budging.
No, but here's the thing. If you look at consensus for 24, consensus is still 240. Consensus for 25 is 275. So you see Goldman not budging on those lower numbers, and you've got to believe, okay, probably people are more likely to come in line with Goldman. So you don't really have any great earnings growth ahead. You don't really have anything that's going to make valuations go up. I don't really see how the market goes up significantly or strongly from here for some time. And what's going on, it just muddies the waters and feels horrible.
I mean, knee-jerk especially. Obviously, the market had an immediate upset when the futures had opened, and now you see this bit of a comeback that we're trying to make here. So Weiss, Evercore writing today that expectations are pretty low for earnings, even though, this is the time where you get back to some earnings growth. It's still a low bar. I don't know where, what greater sort of expectations are, but why don't you size up what's at stake this week?
Yeah, I'm not so sure I agree with that. First of all, the expectations are muted because they're going to be up for the first time in about a year or so. So how's that muted? You're seeing the turn. And I don't think investors focus on just this reporting period.
Right, but they haven't turned hard.
Right, but they're extrapolating.
If we showed you the earnings growth,
true
bar chart that we have, you'd see. I mean, it's, barely a tick higher, making the point that, okay, anything back to earnings growth is good.